Have you procrastinated about setting up a tax advantage retirement plan for your small business because you're, a one-person shop? Do you wish you can invest in cryptocurrencies on a tax-favored basis? If the answer is yes to both, you're not alone. Many self-employed small business owners are rushing to set up retirement plans with one huge benefit now. Cryptocurrency is now a viable asset in 401k plans. I will state it better. Want to save lots of money, save on taxes, and put money into cryptocurrency and maybe not even have to pay taxes at all down the road? Keep watching. You're going to like this. My name is Kenner French. I'm with vastsolutionsgroup.com and also vastholdingsgroup.com. And finally, cryptokplan.com. We're the first of our kind to allow crypto investments in qualified plans like 401ks. If you stay for a while, by the way, you're going to get a nice little bonus. It's going to be worth your while. For owners of profitable one-person business operations, a relatively new retirement plan, a solo 401k. They provide the potential for retirement growth and tax mitigation. The main solo 401k advantage is potentially much larger deductible contributions to the owner's account. That is your account. Combine that with the fact that you can put crypto money in those plans, two huge benefits. With a solo 401k, annual deductible contributions to the business owner's account can be composed of two different parts. By the way, a solo 401k it basically means there are no employees. It's just the sole owner or maybe even a spouse who work for the company. Now, the first part, elective deferral contributions for 2021. You can contribute to your solo 401k account up to $19,500 of your corporate salary if you're employed by, let's say, a S or C corp, et cetera, et cetera. Now, or same thing for a single member LLC that's treated as a sole prop for tax purposes. The contribution limit is $26,000 if you'll be 50 or older as of December 31st, 2021. $26,000 figure includes an extra $6,500 catch-up contribution, as they say. The first part, called an elective deferral contribution, is made by you as the covered employee. With a corporate solo 401k, your elective deferral contribution is funded with salary reduction amounts withheld from your paycheck. With a solo 401k set up for a sole prop or a single member LLC, you simply pay the elective deferral contribution to your own account. Now the second part, employer contribution. On top of your elective deferral contribution, the solo 401k arrangement permits an additional, up to 25% of your corporate salary or 20% of your net self-employment income. This additional pay-in is called the employer contribution. For purposes of calculating the employer contribution, your compensation or net self-employment is contributed. With a corporate plan, your corporation makes the contribution on your behalf. With a plan set up for a sole prop, or you as a single member LLC, you're effectively treated as your own employer. Therefore, you make the employer contribution on your own behalf. Now, for the combined contribution limits for 2021, the combined elective deferral and employer contributions, they can't exceed $57,000 or $63,500 if you're 50 and above, or 100% of your corporate salary or net self-employment income. For purposes of a second limitation, the net profit on Schedule C, E, or F for the business in question minus the deduction for 50% of your self-employment tax attributable to that business. Let's go over some examples now. Example 1, corporate solo 401k plans. Let's say Lisa, age 40, is the only employee of her corporation. Doesn't make a difference if it's a C or S corp. In 2021, Lisa, let's say the corporation pays her $80,000. The maximum deductible contribution for a solo 401k plan is $39,500. The amount is composed of the $19,500 and also reduces her salary to $60,500 and what also has the net effect on her taxable salary. The $39,500 amount is well above the $20,000 contribution maximum that would apply to the traditional DC plan. The $19,500 difference is due to the 401k elective contribution privilege. Now, a variation. Let's assume she's 50 or older as of December 31st, 2021. In this variation, the maximum contribution would be $46,000. Obviously, that includes the $26,000 and the $6,500 extra catch-up provision plus the $20,000 employer contribution. That's much more than $20,000 contribution maximum than would apply to a traditional corporate qualified plan. Now, I think you're starting to get why there's a benefit. Okay, now, the second example, self-employed solo 401k plan. Let's say Larry, age 40, operates a cable installation maintenance company, right? It's a sole prop. In 2021, Larry has net self-employment income of $80,000. The maximum deductible contribution to his solo 401k setup would be $35,500. It's the amount comprised of the $19,500 plus his $16,000 employer contribution. The $35,500 amount is well above the $16,000 contribution maximum that would apply with the traditional self-employed plan set up for Larry's benefit. Obviously, the $19,500 difference is due to the solo 401k elective contribution privilege. Another variation. Now, let's assume he's older, 50 and above. In this variation, the maximum contribution limit for him would be, well, he'd be able to put in $42,000 because he has that contribution catch-up provision. Now, that's much more than the $16,000 contribution maximum that would apply with a self-directed, self-employed DC plan or defined contribution plan. So I think you're starting to see the benefits. Now, the fact that 401ks can be invested in cryptocurrencies allow for such investments as, Bitcoin, Ethereum, Litecoin, etc. It's huge. The best part is that crypto grows tax deferred and no taxes are paid or due as if they're sold, because really cryptocurrency is considered property, and you could be taxed as high as ordinary income tax rate if it's within a year. You buy and sell within a year. Now let's take it a step further. If you have deferred money into a Roth 401k, here's the power. The money grows tax-free upon distribution. The money's pulled out tax-free. Better said, it's not taxed when in at all. When you pull the money out, let's say you put in $10,000 into a Roth 401k, and if you abide by all the IRS rules, it grows to, let's just say, $1 million. What happens when you pull the $1 million out? Tax-free, nothing. You don't have to worry about the taxes at all. 10,000 to $1 million, pull it out tax-free, gotta like that. Now, all that's really good, but that's not the bonus yet. Let's talk about the specific bonus. My book, The Entrepreneur's Manifesto, a collection of smart financial advice. You get that just by staying for this video, for the length of this video. Email us at admin@vastsolutionsgroup.com. We'll ship it to you. And thanks for staying this long. By the way, if you're watching this on YouTube, please subscribe to our channel, like it, hit the bell for alerts, etc. By the way, a last reminder, I'm proud to remind people that my firm, vastsolutionsgroup.com, was the first in the industry to allow crypto investments in 401k plans. When we developed the service called Crypto K Plan, we had no clue it was going to be such a big success. You can research it at www.cryptokplan.com. It's revolutionary. You'll see. I hope this helps you in your quest to save money for retirement, save taxes now, and also invest in cryptocurrency. It's all the rage right now. Go for it. You'll be glad you did, with no guarantees, by the way. Once again, my name is Kenner French from vastsolutionsgroup.com. If you need detailed information on me, check me out, rkennerfrench.com. Again, thank you so much for watching this video. It's been a pleasure, and hopefully you found value.